Charlie Munger was an absolute legend in investing, but his ideas weren't always loved. Over the decades, he was a key figure in shaping Berkshire Hathaway with his blunt candor and razor-sharp insight. But Munger was also no stranger to controversy. In fact, some people really hated his ideas, especially some of his more unconventional ideas. From proposing a windowless megadorm that the New York Times called a grotesque, sick joke, to unapologetically bashing Bitcoin, and to his thoughts that diversification is a dumb thing to do. All of these thoughts have drawn criticism and sparked debate. And that's not really talked about in modern investing circles, especially after his passing. We really only talk about the super positive things these days. But I don't think that that's the way Charlie would have wanted it to be. He loved debate, and understanding why Munger was cutting against the grain and his logic behind these provocations is extremely valuable to us as investors. We'll cover 3 of his most unconventional ideas in this video, but first, if you like this type of content, please consider giving us a like and subscribe. We make videos multiple times a week on intelligent investing. Alright, the first Munger controversy we'll cover actually has nothing to do with investing, but rather how Charlie gave away his investing winnings. You may not know this, but Charlie's lesser-known passion was actually architecture. In a 2019 interview with the Wall Street Journal, he said that he spent several hours a day working on architectural drawings. He said that it was his creative outlet. Despite no formal training, and even going so far as to say he's never read a book on architecture, he poured hundreds of millions of dollars of his own fortune into designing tons of various buildings. But he had a special interest in student housing. And before every single gift, he would make one giant stipulation. The beneficiaries had to follow his designs to the letter. And that worked in most cases. Over the years, tons of schools received tens or even hundreds of millions of dollars to build various student housing centers. Just to show you how generous he was, in 2004, he donated $43 million to Stanford for graduate student housing. In 2006, he gave $20 million to University of Michigan, his alma mater. And then in 2013, he doubled down and gave a whopping $110 million to University of Michigan for a massive residence, plus plenty of other donations through the years. But then, his grandson enrolled at University of California at Santa Barbara, and that's where this controversy starts. In 2014, he donated $65 million for resident housing for UCSB's theoretical physics department. He loved the sciences. And then that followed by an insane $200 million donation to construct an 11-story, 1.68 million square foot megadorm, which would be called Munger Hall. And of course, that was on the condition that the university follows his architectural blueprint exactly. Now, Munger's architectural ambitions soon ignited a firestorm of backlash, especially over one radical choice that he made. Charlie's dorm designs maximized the interior space at the cost of natural light, meaning that most of the bedrooms would have no windows whatsoever. In fact, a staggering 94% of the proposed 4,500 student bedrooms would have been windowless. And when this plan became public, outrage followed. An architect on the university's design review committee resigned in protest, blasting the windowless megadorm as unsupportable from my perspective as an architect, a parent, and a human being. All right, calm down, right? Critics likened the dorm to a human experiment. The New York Times architectural critic derided it as a grotesque, sick joke, a jail masquerading as a dormitory. Student and community members dubbed the colossal building as Dormzilla, protesting that confining young people to shoebox rooms would be psychologically damaging. And by late 2021, the uproar was so intense that the project's fate became uncertain. And in 2023, the university ultimately scrapped Munger Hall entirely, amid sustained public criticism. So why would a 97-year-old billionaire insist on a seemingly draconian living arrangement for students? And I'm speculating here on my answer, but someone once told me that you treat money throughout your lifetime based on how the economy was when you were 16. And when Charlie was 16, we were in the midst of the Great Depression, where people had to live incredibly utilitarian and forego comfort for trying to build a better life. And you can see that principle in the now defunct Munger Hall. His reasoning and design flowed from a utilitarian, depression-raised investor mindset. He saw trade-offs that others didn't. In his view, eliminating windows allowed for a larger, more efficient dormitory, easing a critical housing shortage with sheer scale. And the small bedrooms were intentional. He actually thought of them more as sleeping pods, and the idea here was it would push students out of isolation. Munger believed residents would spend more time in shared common areas to socialize, and this would help them collaborate if their private rooms were tiny and Spartan. He once argued that everybody loves light and prefers natural light, but it's a game of trade-offs, noting that a big windowless square building could house far more students and bring them closer together than a traditional design. Munger was effectively applying an investor's logic, maximizing utility, to architecture. sacrificing one comfort in order to solve two bigger problems, community and capacity. I mean, real estate costs in Santa Barbara are not cheap. In fact, after visiting the University of Michigan dorm, Munger claimed you never saw a happier bunch of students, believing that the vibrant common spaces outweighed bedroom compromises. But detractors remained unconvinced. But this willingness to defy norms in pursuit of a long-term payoff is classic Munger. Before his death, he actually admitted one flaw in this design, that he should have installed a high-tech virtual windows to simulate daylight. Yet, he stood by his core idea that the bold solutions require accepting some unpopular trade-offs. Was this the right thing to do? I don't think I have the answers here, but it is a worthwhile thought exercise. Housing is a very serious problem, and Charlie had a solution. But most people didn't like it. I mean, the communal spaces did seem pretty nice, if I'm being honest. And at the time of this video being recorded, UCSB still doesn't have a replacement for Munger Hall. So they probably would have benefited by not looking a gift $200 million horse in the eye. All right, the second reason people hated Munger, and this one's probably my favorite. So another arena where Munger's blunt convictions courted controversy is cryptocurrency. He was never one to mince words. Munger was probably Bitcoin's most ferocious critic in mainstream finance. Here's just a glimpse about what he thinks about Bitcoin. And honestly, finding the best clip was hard. You can find so many different ways that he disparaged Bitcoin, and they're all pretty funny. But I think this one best exemplifies it.
Today it's 9,000. It had hit 19,000.
So it's more expensive rat poison.
So Munger's caustic anti-crypto remarks here have, unsurprisingly, enraged crypto enthusiasts, which we've done on this channel a few times too. Maximalists are not smart people. But they argued that Munger was some old guy, that he was out of touch with new technology and too dismissive of the next generation of finance. And some pointed out that Buffett and Munger had missed out on early tech opportunities in the past. For example, they admitted that they underestimated companies like Google and Amazon, and they were crying over spilled milk over missing Bitcoin as well, which that's a lame excuse. If you look at how they've invested, they invest in productive assets. They've done it for over 50 years. That's pure play Buffett and Munger. But another point that critics have made that actually has some merit in my mind is that there's a little bit of hypocrisy. Even as Munger decried crypto as worthless, Berkshire Hathaway actually made an investment in a Brazilian company called Nubank, which is a fintech bank that offers crypto trading to its customers. Now, if crypto was truly a rat poison in Munger's eyes, why would Berkshire, indirectly of course, be involved in a crypto-friendly enterprise? So those inconsistencies gave ammunition to the critics who pointed that Munger was basically too biased or set in his ways. And Munger's sharp tongue here didn't win him any diplomacy points either. In this interview, he said, "I regard the whole business as antisocial, stupid, and immoral."
That people are buying just because they think they can sell to somebody else at a higher price, even though it inherently has no intrinsic value. And so I regard the whole business as antisocial, stupid, immoral.
And true to form, Munger hardly flinched at the pushback he received, which I respect. His stance on crypto remained as uncompromising as ever, all the way until his death. In Munger's analysis, Bitcoin and other cryptocurrencies are not real investments at all. He once said, "Crypto is an investment in nothing," arguing that unlike a stock which gives you actual ownership of a piece of a business, these digital tokens give no claim on profit or value. And he views it as a zero-sum gamble, fueling speculation and delusion, rather than producing anything of worth. And a lot of the reasons for his public outcry on this was that he had a lot of fear that it would harm unwitting investors. He called the crypto volatility and hype a magnet for idiot booms that will eventually collapse and leave people broke.
I think these idiot booms do harm to a country. They frequently come to bad ends, and they cause economic consequences that are bad for the whole damn country. And so I like it when my country steps hard on idiot booms instead of fanning the flames.
In an often quoted tirade, Munger said that in his life he tries to avoid things that are stupid, evil, and make me look bad relative to someone else. And he said Bitcoin does all three.
In my life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else. And Bitcoin does all three. and in the first place, it's stupid because it's very likely to go to zero. In the second place, it's evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity. And government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. And with all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
So by sticking to companies with real earnings and eschewing what he saw as 21st century tulips, he believed that he was guarding investors and perhaps society at large from an expensive delusion. And let me be clear here, he's been wrong on this so far. I'm pretty agnostic on crypto myself. I've held Bitcoin in the past. I sold it when my investment thesis changed and profited pretty comfortably from it. And I don't really know where it goes here. I can see it becoming a strategic reserve, and I can also see a quantum computer nuking it. We actually made a video on it. We'll link it at the end if you want to hear more critical insights on Bitcoin, because YouTube is just flush with pro-crypto bulls. And it's critical to be an intelligent investor to have a bear and a bull case and make your own decision. But anyway, the ferocity of his crypto critiques reflects Munger's deep-seated aversion to speculative fervor. But in the same vein, he also didn't like diversification, which brings us to his last controversy. See, Charlie Munger believed that wide diversification often dilutes returns. Instead of holding hundreds of stocks, he famously advocated making only a few concentrated bets when he saw an exceptionally good opportunity. He argued that diversification is a protection against ignorance, but the real skill lies in identifying a handful of superior businesses and loading up on them. And he had a method for this, which he outlines in Poor Charlie's Almanac, which I cannot recommend reading enough. I've read it 3 or 4 times in my life. It's a wonderful book. And of course, that system that he laid out in typical Munger fashion was a folksy metaphor: horse racing.
They're off.
See, people who actually win in horse race betting use a system called the pari mutuel betting system, where prices adjust based on other bets, similar to the stock market. But the key, and what the smart horse race bettors do, is they wait for rare mispriced opportunities and then bet big when their confidence is high. Instead of spreading money thinly across many different races, they wait for the big one and they go all in. And this is exactly how he treated his investments. He believed that going all in on a few stocks when the opportunity was right gave him a very high probability of success. So his philosophy boiled down to patience, waiting for the right moment to make high conviction investments. Now, this approach goes against norms. It's controversial because it contradicts the conventional wisdom of diversification. Most financial experts advocate that spreading investments across many different asset types to reduce risk. And by contrast, Munger only held a few stocks at a time. When he ran his own fund, he actually went into a period where he only had 3 or 4 companies. And critics argue that this extreme level of concentration exposes him to excessive risk. But he and Buffett would argue that risk comes from not knowing what you're doing. That's a quote. And over the years, Berkshire emulated this philosophy. In the late 1980s, Berkshire put over $1 billion into Coca-Cola, a massive portion of the portfolio at the time. And critics worried at the time if consumer taste shifted, Berkshire's fortune could take a significant hit. And similar concerns arose with major investments like American Express, Wells Fargo, and later Apple. And Munger's concentrated approach also faced challenges during market downturns, such as the 1973-74 crash, which caused steep losses in his private investment partnership. But over the years, over his multi-decade career, this strategy worked. He has one of the best investment records of all time. Let me be clear, Berkshire Hathaway's biggest successes came from a small number of high-conviction investments. The same Coca-Cola investment that raised eyebrows in the 1980s turned into a multi-billion-dollar stake, generating hundreds of millions of dollars in annual dividends. A similar story unfolded with American Express, Apple, and even Chinese electric car maker BYD, which saw its value multiply several times over Charlie's life. Munger believed that fortunes are built on a handful of great investments rather than diversifying for its own sake. In fact, and this is wild, guys, he actually said that Berkshire's success came from just 10 major ideas over their entire career. 10. And he said he could probably even boil it down to 3. So rather than diversifying, his term for unnecessary diversification, he ensured that the best ideas drove his results. His personal investment in See's Candy was another example. Instead of spreading $25 million across multiple companies, he and Buffett put all of it into one single exceptional business, which has generated them billions of dollars in returns over time. Munger's investment philosophy teaches that true success lies in making selective and bold bets. Now, let me be clear. Until we have data to prove otherwise, we should not assume that we're Buffett or Munger. Even they acknowledge that diversification is necessary for most investors. But those willing to do the research, to do the homework, and act with conviction, this type of concentration can yield extraordinary rewards. And while I never give financial advice, I can tell you what I've done with my own capital. I've been an investor for about 13 years now, and I haven't bought more than 20 stocks in my entire time, and one private business. I'm very selective, and I wait for an opportunity. I don't always get it right, nor does Buffett, but I've had a few really good wins that have made me hundreds of thousands of dollars. But even with this high conviction that I have, I know that I can ride out the turbulence of a market. I'm still not assuming that I'm Munger or Buffett. I always dollar cost average in the S&P 500, especially with my retirement accounts. In fact, I automatically invest 20% of my income into the S&P 500. I don't even see it. I don't even know it's there. That is my nest egg. And this probably isn't the best thing for my investments. I'm pretty sure I'll outperform the market going forward. I've done it over the past 13 years, and I'm just getting better as I keep going. But it helps me sleep better to know that I have a nest egg. Anyway, Charlie Munger's legacy is complex, to say the least. On one hand, he's an affable billionaire next to Buffett, dispensing folksy one-liners, rationality, and patience. On the other hand, he's an independent thinker, unafraid to champion provocative ideas, be it a dorm with no windows or a crusade against Bitcoin. But these ideas invited criticism. So what can we learn from these? Well, first, unconventional ideas attract backlash. And there's nothing wrong with that. We should celebrate debating unconventional thoughts. And second, in every one of these controversies, Munger was focusing on the big picture. This is an absolute core Munger principle. Remember, he liked to think in terms of systems, and we can learn from this by thinking in second-order effects, not just what happens now, but what the consequences down the line might be. Munger's approach was never about chasing trends. It was always about understanding cause and effect, weighing risk and reward over decades, not days. To me, I think the ultimate takeaway is the importance of critical thinking itself. Munger's ideas were controversial, but they weren't random. They sprang from a lifetime of refined reasoning, mental models, and worldly experience. And by scrutinizing how he arrived at an idea, even an extreme one, we practice that same kind of rigorous analysis that made him successful. You don't always have to agree with Munger's ideas. He wouldn't want you to. He loved debate. Instead, consider the reasoning and then form your own view. All right, that's all for this one. If you want to learn how to pick stocks exactly like how Charlie and Warren described it in their over 60-year career, we made a course on it. It's included for free as part of your Flank membership. And of course, if you're interested in learning more about what we're doing at Flank, there'll be a link in the description below. And if you're interested in checking out the video we made about what happens when a quantum computer nukes Bitcoin, which will happen, you'll see that over my shoulder now. Thanks so much for watching, and we'll see you in the next one.